Okay, I see that my video was too long for my recording. So I just have a few more slides to go to finish this up. So obviously I'll have to post part two, the section two. But I ended up on this slide. I'm not sure if I read it in its entirety or not. I'll leave it up here for you to read it. But this was recording sales tax liabilities. Okay. Then setting up product and services for a sales tax adjustment. Let's look how to bundle. So you open up product services, select new, choose service, enter a name and a description, put in the sales price rate, um, link it to an income account. From the sales tax category drop down, say if it's taxable or non-taxable, this could be adjusted in the invoice if needed. You would go save and new. Set up the bundle, you would go select change type and then select bundle, enter the name followed by description, display the bundle components when printing or sending transactions, do that unchecked, add the new service item just as you just created the bundle, and do quantity of one, and then the new service item, do a -1, and you're already set up a beginning balance item, and you'd go save and close. If you didn't, select save and new. Okay, if you already set it up, you do save and close. If you didn't, save and new. Next, set up an item for beginning balance. If you didn't already set it up, with entering open accounts receivables, you want to go to change type again, do service, name, description, open balance equity, and then that select income account. From the sales tax category, do non-taxable, save and close. Create a $0 sales receipt for each taxing agency. So now that you've set up a bundle with a new sales tax, and let's say you made it taxable, you would need to then put in your new sales tax agency. You should be familiar with all of this. So you can go create sales receipt. You don't need to put a customer's name, put the date. It'll trigger automatically if there's sales tax. And then you should be familiar from a previous video how to set that up. It's best practice to use your clearing account, like undeposited fund, let's say. For products and services, enter the bundle created previously, then enter a dollar amount in the rate fields. And then, for example, here, let's say it's $160, the rate is 8%. Then what happens is when you look at the sales tax, you would know that the total was 2,000 because 2,000 times 0.008 is at $160. On the line with the negative quantity, enter the same rate and make the tax box unchecked to see. So from the select the sales tax rate drop down, choose the correct tax agency. Back in the product and service column, choose the beginning balance item, quantity, enter -1, and then that zeroes out the sales receipt. So all you've really done is just set up the tax agency. In the transaction journal, you'll see that sales tax payables increased and open balance equities decreased. And then you'd be able to see that the correct sales tax liability and the sales tax. So you just did that to create the sales tax and also put in the sales tax agency. Verify opening balance equity balance. So the final stage in doing all your beginning balances, and this is manually, it can be quite tedious depending on how big of a company it is. So what should you do if your opening balance equity is not 0? You want to go to that, double click it, open up and see what transactions are there. If it's not washing properly, then you need to adjust or duplicate, retain earnings, or reclassify it to other equity accounts. Once the balance have been entered and verified, you can continue setting up the QBO company. Connect the bank and credit card accounts, because remember, your online banking, your bank feed is not going to come over. If it's the initial sync, pull it in the activities from the bank posting dates before the start date. Exclude this bank activity if there's anything there. And surprisingly, there's not too many questions, I believe, right? I don't believe there's not that many. So here's one. Which transaction type should be created to enter opening balances when starting a company from scratch in QBO? The answer is a journal entry transaction to enter most of the balance sheet account balances. So I wouldn't say most, but yeah, it does enter balance sheet accounts. A barbershop, oh, this is why it is. So the second question is really long. All right. So it tells you a barbershop has kept their books manually And this is all the information that there's several information. Here's the details. The owner used his prior accounting system for historical income and expense activities prior to January 1st. There's 3 barbers who are independent contractors. They rent booths, at $350 a week. So they give you all this information, and I'll hold this up here so you can maybe take a picture or write it down. This is the second part because it's very long. The second part is some more information. And at the very end, here's the question. What 4 accounts would be included in the journal entry for recording beginning balances? Well, there's a lot here but remember, like accounts receivable, accounts, but none of those things would apply. So it's only the ones that actually apply. So here are the 4. Opening balance equity, loan payable, checking, and credit card payable. Here are the 4 accounts that would be included in the initial journal entry. Because remember, then you go back and you set up the banking feed, you set up, your inventory and so on. So, or import, information. So these are the 4 accounts that would be included in that initial journal entry. And that ends section 5. So I apologize that this last little few minutes didn't get through, but I guess there's a time limit on my recording file. So this is part 2 of section 5, and now the advance is done, and I will be starting on payroll within the next couple of days. All right, thank you for watching. Add anything that you see, and if there's any questions that you want to make a comment about, because remember, I'm getting this from other people, let me know, especially if you had a question and there was other answers and you think one of them might be correct. Please put that in the comments. Thank you.